In this video, I'm going to show you the difference between a winning and a losing setup. Shown on the screen is actually a losing case study from one of my students. And I'm about to show you how to turn this losing trade into a winning trade. All it takes is one simple critique. So here we are on the charts, and I'm going to show you guys the proper way to actually execute this trade and where the student actually went wrong. When you are trading price action, if there are a lot of built up orders, they need to get taken out before making the true move. So in this example, we are bearish and we are forming highs, but what this student actually did was he wanted to target right here to then ride it to the lows, whereas that is invalid. So you need to be trading price action with liquidity. Those two together, you will become a very profitable trader. You just need to understand them properly. So we have the base right here, and what we have are equal highs, and the student wanted to target this equal high to then ride it back down to the low, and is invalid. These points need to get taken out to then target the base of the move to then ride it down to the lows to continue the trend. So obviously, following the trend, we are quite bearish up to this point, and the low that I would mark up within this area would be right here, which we did break. So now going into the losing setup, this student actually wanted to take the sell from sitting right here, and to me that is invalid for many reasons. Number one, we want to be watching the very base of the move. So a lot of you will think, alright, well, this is the base of the move, this is what pushed price down, bringing this previous low sitting to the left. But the main thing that you need to look for with price action is liquidity. Without liquidity, you will not trade price action correctly. So the main reason for this setup being incorrect and invalid is because we have equal highs sitting right above the supply. So instead of taking the trade from right here where you think push past the very last low, we need to look at the base. The base of the move that pushed past all of these lows right here and this major low sitting to the left. So here we are, we have our first break, our second break, and our third break right here. All these highs within this area are just classified as liquidity. So all you want to do is simply get in off the base and the high of that whole impulsive move, breaking all of these lows. These highs in this supply right here are invalid and they are classified as liquidity, and that is what we want to get taken out before the mitigation. So we will actually play price out, and you can see this student did end up getting into the supply and losing, but as you can see, we tap into this previous supply right here, the base of the impulsive move, breaking all the lows, taking out those equal highs in that fake supply while we're targeting the low of the move. And that is simply it. And that is it. It is as simple as that. You don't want to overcomplicate your trading. Stick with price action, stick with liquidity, and from there use the rest of your confluences to build on top of that setup. With continuation setups, we want liquidity to be taken out before the mitigation of the true demand or supply. Your confidence and your confluences are not high enough to take a trade if you do not have liquidity before your mitigation of the true supply or demand. So make sure all your confluences line up, make sure you're trading with the trend, the order flow of the market, and make sure you have liquidity before the mitigation. You simply do not want to trade off equal highs or equal lows. You want to wait for them to get taken out to then mitigate your supply or demand to then continue the trend. If you guys enjoyed this video, leave a like, comment, subscribe. Let me know what you thought in the comments below. All my links are in the description below. If you need further help or guidance within your trading, click the link below. I'll see you guys soon, and I'm out.